2015 is a tough year for Russia. As oil prices fell to the lowest level in years, the world's biggest energy exporter will now see its economy shrinking until at least 2018. Despite Moscow's efforts to attract more Chinese investment, China's direct investments in Russia shrank by 25% in the first half of this year, even though there was an increase in China's overall investment abroad.
Russian economy is not very attractive for Chinese investments. First of all, because there is a stagnation in the Russian economy.
Analysts say Russia and China have different needs when it comes to investing in non-energy sectors. Russia wants investment to produce its own goods, while China needs infrastructure to be able to sell its goods in Russia. After Russia's currency, the ruble, depreciated by more than 50% last year, Russia's economic outlook is now more optimistic than it was at the beginning of the year.
Generally, we'll see more stability on the financial markets in the second half of the year, such as low inflation, better fiscal performance, lower rates as a result, and probably there will be recovery on the government bond market. And this will pull down the rest of the economy. So growth will be clearly negative yet, but fourth quarter will be less negative.
In the first quarter of 2015, Russia's trade with the European Union shrank by over 37%, following last year's ban on European and American food products, imposed in response to Western sanctions. Moscow vowed to develop its own food production instead. In May, China and Russia agreed to launch a $2 billion investment fund to develop agricultural projects in the two countries.
It will be investments in the different sectors because local markets is becoming smaller, but at the same time it means that there is a chance to invest in the other sectors, which could be potentially competitive on the global or regional markets.
Russia will also need foreign investment to build infrastructure needed to host the World Cup in 2018, including stadiums, railways and highways. Russia has received some $21 billion of net foreign investment in 2014, compared with over $69 billion the year before. China remains one of the biggest sources of funding and investment for Russia, even though many of the mega deals signed by the two countries last year, including a $400 billion gas deal, are yet to bear fruit. Anya Erdaeva, CCTV, Moscow.